Good morning. Mwana Africa is, I'm going to take you straight to, well, pages are to page 2 of your little booklet. Mwana Africa is a Pan-African resource company focusing on gold and base metal primarily, with a combination of producing, near production, and an extensive exploration pipeline. We're primarily operating in 3 countries, the DRC, Zimbabwe, and South Africa. 2012 has been a year with quite a number of transformational transactions. We started the year in February by announcing a resource of 2 million ounces in our DRC gold exploration in Ituri province. Charles Duplessis, who's our exploration manager, will give you a much more detailed overview of what we're doing there. In April, we had a fundraising in which we brought in Chinese strategic investors that holds 22% of the company today. June has seen our gold production at Frida Rebecca stabilize at around 18,000 ounces for the quarter, which bring us to an annualized production of about 70,000 ounces. August saw us do a joint venture with one of the largest Chinese copper consumers, a company called Hailing, where they've taken over the funding of our copper exploration project in Katanga. And last week we completed one of the largest corporate restructuring in Harare, where we did a combination of a rights issue and private placement to refinance our nickel operation. I will go into more details in the course of the presentation. Frida Rebecca is today the largest gold producer in Zimbabwe. The mine has been in production for over 20 years. It was started by Algie Clough. We've got a resource of 2.3 million ounces at about 2.4 grams per ton. Mwana owns 85% of it. We restarted production in 2009, first by commissioning one of our mills and on a sort of bootstrap method. You know, we went in and fixed all the equipment we had until we were able to secure a loan for the IDC, the Industrial Development Corporation in South Africa, which allows us then to get the second mill into activity and bringing newer, more performing mining equipment. As I said earlier, we've now reached a production of about 6,000 ounces per month. So we will definitely be producing 70,000 ounces plus this year. Our cash operating costs are around $780 per ounce, and we are achieving recoveries of 82% on copper. This table sort of shows you a profile of our milling performance and recovery, and you can see that we've sort of steadily increased and are have stabilized our production. I think what I'm going to do is I'm going to jump a bit on your presentation and go straight into Bindura nickel, and then I'll leave Charles to talk to you about our exploration portfolio. So I would ask you to go to the slide that starts with Bindura nickel. Bindura is a very unique asset in the sense that it's the only fully integrated nickel complex in Africa. We've got a series of mines, a smelter, and a refinery. The company went on care and maintenance in 2009, following a combination of the collapse of the nickel price and extreme hyperinflation in Zimbabwe. We've kept the company on care and maintenance since. Had one attempt of recapitalizing about 18 months ago, but we had to pull back essentially because of the establishment of the indigenization law at the time, and our shareholder demanding that we first clean up the balance sheet of the company. We have now completed the exercise. When we did the fundraising earlier this year, one of the areas where our Chinese investors were particularly interested was in the restart of the nickel complex. In the past 3 months, we have retrenched half of the workforce, settled all of our liabilities with private sector and government, and the restructuring basically was a combination of debt equity swaps. In terms of our workers, we paid them off through giving them houses, opportunity to acquire shares in the company, and also a deferred installment payment that will start in 2014 for those who still want to be paid cash. The rights issue was and the private placement were finished last week, as I said, and we are anticipating exporting our first concentrate in the end of the first quarter next year. We believe that this will then allow us to basically open up the rest of the assets which we have, particularly the Antus Road project, which is probably one of the largest undeveloped open castable nickel deposit today, with access to infrastructure. This is a view of the Bindura complex that sort of shows you the scale of the assets. I think what I want to do now is to ask Charles to come in and give you an overview of our gold exploration and copper exploration, and then I'll be very happy to take questions, and I'm sure you have a lot of questions on what's happening in Zimbabwe and perhaps in the DRC.
Okay, this slide shows you where we are in the northeast part of the Congo. Over here, we're in Uganda. And what you can see running across a slide like that is the great greenstone belt that we have in Tanzania and in the DRC, separated by the great African rift that runs through there. Slide to the right simply shows our near neighbors, being AngloGold Ashanti and Randgold over up there where the arrow is, where there's a plus 22 million ounce gold deposit, and they're busy building a plus $1 billion project as we speak. To the south of us is AngloGold on its own, where they've also completed a feasibility study and awaiting a decision to go forward. And ourselves up here, in between the two. This area I'm pretty familiar with. I used to manage that when I was with Anglo American. This camp and this project here I built when I was with Anglo Gold, and then I went to work for Kalaa, and I'm running around there now. Takes us to our own resource. Currently we're 2 million ounces JORC compliant resource. I'm not going to say too much about the rest of this slide. I'll just take you to the next one to point out that 2 million ounces comprises these resources, of which codomain is the bulk of it, where we currently have 1.4 million ounces at slightly more than 4 gram a ton. We're doing an intensive exploration drilling program there, and we anticipate and are reasonably confident that at Indaba we'll be announcing just for codomain 2 million ounces at a slightly better grade than we have there. We're hoping to have a grade of more like 4.2. These other ones like Le Badolite and Zani Central are essentially the same style of mineralization that we have here at codomain, except that here we haven't been able to drill the ore body to the same kind of depth that we had at codomain, because in these other areas we've got a hematite cap that's up to 200 meters thick that sits above it. At codomain it's been stripped back and it's allowed us access to drill. So at those other smaller resources that are open to depth, we've been constrained to basically drilling the front part of it, rather than drilling to try and drill through 200 meters of plus 50% iron hematite cap. You can see the nature of the mineralization. It's a stacked thrust system. Those of you that are familiar with Sunrise Dam will recognize a very similar geology. Like I say, this deposit we expect to be at 2 million ounces in February, running plus 4 gram a ton, slightly a bit more than it's running at now. We've done 2 gold deportment studies on this ore body, of which the first one predicted recoveries of up to 95%. Although the mineralization is associated with pyrrhotite, it's not in the pyrrhotite. We're busy with a second one now, which is a more detailed study, of which we just had the first results back last week, where the intense ionization stage of the tests gave 96% total gold extraction. So the metallurgy is very simple. It's looking very sweet, and of that 95 or so percent, up to 60% is gravity recoverable. So everything is stacking up to make it look like a pretty straightforward operation. Just go back one. Oh, God. Sorry. Yeah. This area here, Lelamodi, where you can see we've done a lot of soil surveys. We've just drilled the heart of it right now. We did draw one regional line to just get a feel for the regional geology. And what we have is a series of stacked mineralized zones, about 5 of them. We will be adding here a maiden resource of about 400,000 ounces, but at lower grade. This is about 1.8 gram a ton material, but it's a large area. This is like 4 square kilometers that we are pretty confident we have near surface low-grade mineralization. So we're looking at this as a future Tarkwa-style bulk tonnage with huge leach pads kind of an operation. My FD has threatened me with dire consequences if I speculated about the size of what we're looking at here, but what I'll say to you is just look to the north, the kind of numbers you're seeing at Kibali. I don't think we're going to be very far behind them in a few years' time. We go to the base metals. We are down in Katanga. You can see here's the Zambian part of the copper belt. The main copper belt runs through like that. We are sitting the northern and northwestern parts of our ground sort of is in the main copper belt, or the Philian arc, as Jews call it. The story of Katanga, when I talk about Semcat, I call it Semcat, because it's a story about 2008. Prior to 2008, I was well funded for exploration here. We flew a high-resolution radiometric and aeromagnetic survey over about 60% of the area, focusing on the area that was closest to the copper belt. We generated about 30 targets, which were mainly targets that were structurally interesting, and that there were folds with faults associated either under the folds or next to the folds, as well as Rowan stratigraphy, which is the mine series which hosts these big sulfide deposits. Then 2008 happened. I had 30 targets and my funds dried up. So our focus then shifted to Zani-Kodo, for which you can see what the results were. It was the right decision because even then we knew that Zani-Kodo was gonna deliver the goods. So when I had money, we focused on a small deposit here, known as, well, not that small, but it's known as Zimbabwe, where we've also finished a scoping study now on about 100,000 tons of copper, running 2.5%. It's a horizontal ore body at surface that's just slightly less than 1 kilometer long. It sits right at the surface. It's free dig. You can literally take the ore and crush it with your hand. It's running about 2.5% in malachite. We finished a scoping study and it looks like we will be taking that into production and it should be a nice little earner going forward. Not the kind of company maker sort of thing that Zani-Kodo is going to be, but we found a copper deposit despite the constraints that we had on funding there. As Kalaa said in the introduction, we've done this deal with Hai Ling. I was in the field with them there last week. We took them to some of the prospects and proposed a program to them for 12 of that 30 targets, which they've agreed to, and we'll be taking it forward next year, spending anything between $6 and $7 million on it. The one thing that has happened with Hai Ling, and that's enabled us me to do, is up to now we've basically been chasing the sort of deposits that we discovered, which are surface oxide deposits, because these things are relatively easy to find if they're there because they're at surface. So you can trench, you can dig pits, and you can do soil sampling, and you should find it. You don't have to start drilling or do expensive ground geophysics. We are now able to start pursuing some of these deeper sulfide blind targets that could be 100 to 200 meters below surface, because that's expensive exploration, and that it's basically you have to do drilling onto your conceptual targets, or you have to do expensive geophysical techniques like IP. With the funding coming in now, we'll be able to open up on two fronts to go after the sulfide and the oxide deposits. And at long last, I've got some money to chase my targets that I generated 5 years ago.
I think I'd like to basically summarize by saying that this was a watershed year for Mwana Africa. We've basically brought in some strategic partner at the asset level, as Charles has explained, to take over the funding of our copper exploration. With the placement we did earlier in the year, we've been able to recapitalize Bindura, that sits now with $23 million in cash, ready to start production. Mwana has $10 million left at the moment at the center, and we have Frida Rebecca that is throwing $2 million every month back to the center, and that is more than sufficient to cover our gold exploration and our operating cost. Clearly, Mwana Africa is for people who are slightly more courageous than the previous speaker, but I think things are looking very bright. And I'd like to solicit questions from you.
Yeah, great. Let's have questions from Kalaa. There's one in the centre here.
A couple of issues, obviously, that we'd like you to comment on is the indigenisation, and secondly, shareholder value, which is obviously not being realised by the share price. And if you've got any particular views on the diversification away from just the AIM market to realise shareholder value with, say, Canada or other areas which are not so risk averse with regarding our geographical positioning.
Look, on the indigenization, I will say that At Bindura Nickel, we basically started as being an indigenous company. Bindura is listed on the Harare Stock Exchange. Before this rights issue, Mwana controlled about 53% of it. And we had the government as the second largest shareholder. The way we've done the recapitalization, the government and the workforce have an option that is running until the end of the year to convert some of the debt which we have been able to repackage into shares. The government has accepted the principle. Bindura had a debt of about $9 million. 8 million, I'm sorry, which it owed to the tax authority, the power company, and various other bodies like that. What is going on is those debts have been parked whilst there are some legal constraints that prevent some of those government entities from owning shares into listed company. There are some structure that the government is putting in place that will allow them to basically move the debt into some other pockets. And I anticipate that once this exercise is complete, we will be back to being compliant. The government has been very supportive and, in fact, has worked very hard with us to make sure that we had the support of the workforce and of all the other creditors. So, I think they also understand that the requirement, the priority has to be to restart the nickel complex. They have given us what they call the national project statutes. So I don't anticipate any sort of challenge or anybody basically preventing us from realizing the assets. On Frida Rebecca, we have made a proposal to the government, and I'm confident that we will reach a settlement that is that will create value for us and for the Zimbabweans who are going to be our partners. With respect to what plans are, look, we have looked at the opportunity of restructuring the group and perhaps spinning off some of our assets. And I think the conclusion we've come to is that the group is probably better off staying as it is. You probably need to have a bit more critical mass before you start looking at listing the gold separately. And I'm not really sure that Toronto or Hong Kong, for that matter, are any better than where we are here.
And any more questions for Kalaa? That's covered quite a lot in that question. There we go. This one there.
Thanks a lot. Just for the Zanikodo, what's the sort of rough timelines for getting the mine into production? And do you have a sort of, I know it's very early, but sort of guess of what the cost per ounce is going to be?
Look, I will only say this. Until last year, the DRC didn't figure on the map of gold producer. And, you had Banro that came in last year at 120,000 ounces. Ituri, I think, is going to be the next frontier. In the next 3 years between Anglo Gold and Kibali, this is an area that's going to be producing close to 800,000 ounces of gold. Now, this is significant for us in the sense that if you go back to, let me see. if I go back to this map, effectively what's going to happen is over the next 3 years, Anglo Gold and Kibali are going to be building the infrastructure, the access, and the logistical support that will open up that entire part of that gold provinces. This will make it certainly less expensive and less risky for us to start developing a mine. My wish would be that we would look at gold production somewhere in 2015, which sort of puts us on the tail end of the construction of those two very large projects. And from a cost point of view, I think we will be reaping the benefits of the mistake the previous people are going to make.
Any more? We'll take one more if there is one, and then we'll have to move on. Any more questions for Kalaa, ladies and gentlemen? Yeah, one at the back there, Sophie.
Might you just comment about the security situation in this part of the DRC Congo?
Well, look, touch wood, I'd like to say that we're in a relatively safe area. Look, Ituri used to be probably one of the most volatile part of the Congo. But over the last 8 years, there hasn't been any security threat. I mean, Kibali Gold has been operating there, I think, since 1999, I think. Nothing has happened. We've set up our camp in 2007. Anglo Gold has been there since early 2000. So we have no rebel activities. I mean, you have the odd incident of somebody being mugged or things like that. But from a security point of view, I would say that we're in a relatively peaceful area. There is the Lord Liberation Army that is closer to the border with Sudan. And I can assure you that 400 kilometers in that terrain is you may as well be in another continent. So look, we're very comfortable. There hasn't been any incident in any of our camps. People are primarily interested in working, and there are quite a number of opportunities that are being generated there. Life is generally improving, so there's no incentive really for anybody to be disturbing what the mining companies are doing.
Great. We've run out of time now, ladies and gentlemen. So let's just wrap it up now. I'll say thank you very much to Kalaa Mpinga of Mwana Africa. Thank you, Kalaa.